We're going live on YouTube. I believe so. I have to double check every now and then. Well, my toe's feeling fine. Thank you. Those Epsom salts. Good stuff. Okay. Good? All right, we're going to be streaming on Facebook. We're going live. All right, we're live. Ladies and gentlemen, strategy in place, our earnings setups, what we aim to thrive, what people don't tell you, what you can expect from what I am doing this week. I am Mark Melnick, and this is the Newsbeat Show. Good evening, ladies and gentlemen. Welcome to the Newsbeat Show. We have so many great things to share with you today. We're going to go over our earnings strategy. We did share it with you in the evolutionary gathering, and I want to talk about the mentality and psychology, what people are not telling you, what you could do to aim to thrive in the coming week. And we're going to share that and so much more. But first, by watching this video, you are already agreeing to hold me, Mark Melnick, and T3 Live harmless and not responsible for anything that you might hear, think you heard, dream, think, see, say on this video. If you don't agree to it, you must exit now. And by continuing to watch, you are agreeing to those terms. Thank you so much for agreeing to those terms. So, we have an interesting earnings week coming up. I mean, I read it out before everything. Home Depot, Kohl's, TJ Maxx, JC Penney, Urban Outfitters, Nordstrom's was a popular one on my list. Toll Brothers, Target, Lowe's, Best Buy, Hewlett Packard, BJ's, Splunk, for those who watch that one. Autodesk, Foot Locker. We actually still have multi-billion dollar companies reporting this week, so things are still rather interesting. At the tail end of earnings season, you tend to get, more sub $1 billion companies reporting earnings. But with that being said, we have a strategy that we shared with you on the evolutionary gathering. The strategy was rather interesting. It basically allowed you in the beginning of the week to actually set something up and actually not overtrade. A lot of traders, so I go and, besides for more home run ideas, which we did have one last week, but besides for asking for more home run ideas, the most common thing traders were admitting to, secondary to that, was actually over trading in this environment. Most of us are sort of in standby mode. You'll see a lot of the very seriously, heavily respected members of our room saying that they're hands off, they're taking things light, they're taking things slow. And these are traders that I have the utmost respect for. I mean, these are some of the best traders on the planet, if you ask me. They are consistent, they are profitable, they are big, they're doing well. I mean, my email was filled with so many great things over the weekend. Thank you so much for some of the emails you guys send me of how well you're doing and successful, and you're showing me your numbers. And honestly, it's just such a blessing to be able to serve you and this community of traders in that fashion. But with that being said, let's talk about the strategy in place. So, if you don't want to overtrade, the problem with most strategies, what they don't talk about, is what's actually at risk for the strategy. So, for example, and this is one of the big things, and this is why I'm going to share this strategy within the way I'm doing it, because unfortunately, a lot of strategies just have numerical confines. Now, you probably never heard anybody say that. What's a numerical confine upon a stock symbol? Basically means, well, here's a strategy we did. Here's me making low five figures in 20 minutes. What did I do right? What did I do wrong? You could do that in almost any stock. The Qs, the Spiders, Amazon, Netflix, Google. If you're willing to go heavy enough, you can make as much money as humanly possible. I mean, if you become the best trader, you could become the richest person on the planet. I mean, there's the ceiling for trading is infinite. However, most traders just want to pay their bills and live some form of comfort level of their life where they can maybe save a little, pay all their bills, have tons of hours to do the things they want to do between fishing, family, whatever it is. Everybody has their own desires and within their own time. But some of these strategies really don't explain to you what's involved. So I could show you a strategy and I could say, okay, I made $25,000 this day using this one strategy, and it's great and I love it. But what does that mean? Well, what I have done is I have taken a group of traders and I actually were looking at traders who go for larger profit targets and larger stop losses. They're willing to risk more to make more. And what I have noticed is the traders that try to stick with a mentality of like 2 to 1 or 3 to 1, or every time I buy a stock at $10, I try to sell at 13 and I have a stop loss at 9, or I buy at 10 and my stop loss was 97 cents, they'll say. My take profit level could have been 10, 20, 30 cents higher. But they don't mention how often you get stopped out. They don't mention that when you are actually in the trade, that when traders buy a stock at $50 and they have a stop at 49 with a take profit target of 53, you know what happens? The majority of them are stopped out at 49.75, 49.50, 49 and a quarter. You know how hard it is to buy into a stock with some size at $50 and set a stop at 49 and take profit at 53. I'm using those numbers as an example. The majority of them require a lot of psychological capital. You are going to sustain yourself looking at a red P&L on your screen. Why don't they tell you that with the strategy? Because you have psychological superhumans who can look at the market and handle that. Not everybody is built for that, myself included. Who is built for that psychological attack upon your, who's ready to buy 2,000 shares of a $50 stock, risk 2,000 to make 6,000, and then you see the stock and you're down $1,200 all of a sudden. And now you're stuck in a position, do I double in here since I know where my stop is? Do I just look at my red P&L and L and have all these negative thoughts in my head because I'm so much more used to getting stopped out than having my take profit level hit? Why don't strategies talk about that? I'm curious because everybody has a strategy that has really cool monikers and whatnot, and the cool candlestick and whatever you can insert. It usually has between 2 and 3 words, so it's like a 2-word sentence, like candlestick candy. I don't know. I'm making it up, and they'll share with you this amazing strategy which I use, and I'll quote, I don't know, I'll quote the Wolf of Wall Street, or 10 other people who are very respected and brilliant in the world. And then I'll do a strategy and I'll share with you the strategy that has nothing really to do much with the quote I shared with you. However, I'm going to not tell you the psychological risks involved of taking this position. How often are you going to get stopped out? I'm sorry. You want to stop out a trader 50% of the time, 45% of the time, 40% of the time. 60-40 traders are considered phenomenal, but they don't mention the psychological damage that they, sustain, to the point where you're suffering so much psychological toxicity that eventually you're just going to have phenomenally large losses, because you're going to be in a situation, for some reason you decided to double down and you wanted to make money and you didn't like starting off the day red, and now my next position has to be 2 to 3 to 4 times heavier because I have to make it back, and then I'd like to get paid a little, or maybe if I just make it back enough I'll be able to get back to break even on a larger position. And all of a sudden your mind starts telling you that. Why wasn't this information entwined upon the strategies in which are just surrounding you? And why? Why aren't they? And that, and that is why I showed you the 1% pyramid last week. 1.2% of traders make money, and that doesn't even include the traders who are up like $5,000 after 3 years of trading. They're included as a successful trader. Those traders as well. And we came up, we have this chart right here, and it just really shows the statistics of Which traders are able to actually make money? Do you know that 40% of traders only trade for a month? Were you aware of that? So most people who are listening, most of you have gotten through a very critical step of this pyramid. And then 80% quit within the first 2 years. 7% remain after 5 years. 1% of all traders can profit net of their fees. And those fees don't include electricity and rent, by the way. They literally only incur the fees that come off their account. That's it. Nothing else is considered into net profit. You drive to work, that's not considered part of it. You fill up with gas, you pay tolls, you spend 2 hours of your life in traffic each way, round trip, every day. Okay, that's not included in there. That's not included. Wow. I really wish it was. It isn't. So when I stopped and I looked at that and I had to step back and I had to say, why is this happening? Why is this happening? The reason why this is happening here, the reason why this is happening here is because none of these strategies are supposed to psychologically define a human being. These are all mathematical strategies. And because math is an absolute thing, I mean, wow, I love mathematics. It was my favorite thing. I breezed through high school with all A's. I never studied. I never opened a book. I'm a little bit of a math nerd. I love math. But if you're trying to describe mathematical numbers to a human being who can react differently in between times, you're not going to have the same form of results. Oh, one, two, three, four. No, sometimes traders are selling at two and they don't make it to one. They covered their position. They at $1.92. You see, all these, you're down money. You sell out before you stop. You're down money. You decide to double in. These are not taken into account with the trades that people are giving you. That is why when I say the important thing is to be up money almost immediately. I think you guys saw it even trading Uber when I was trading Uber on the IPO day, which I made money on. I think it was just one of those situations where I was like, I'm suffering psychological toxicity just from watching this name and the way it was moving, which actually reminds me. Can we bring up, do we still got a chart of it here? Yep, we do. Take a look at the Uber chart. This chart was causing me psychological toxicity. Here's a 5 minute chart of Uber. Actually, just going through Friday with these bars. Look at that. It's the end of Friday when Uber IPO'd. That was causing me psychological toxicity. And even though I made money on the trade, I stepped away from the trade and said, that is not something I would ever want to do again. Because what people don't realize is there's certain money that is not worth it. And this came to a very interesting point actually where there were trades that I could look at and say I can make 10, 15, 20 cents on that trade for a hyper sell. I could get in, I could have a 2 cent risk, and I could take, I don't know, 40, 30, 40, 50, 60 of these trades, depending on the day. I don't know. And I could scalp 150 bucks, 150 bucks, and I could do it 20, 30 times, like easy on any day. And I step away from there and I don't do it. And people wonder, why don't you do those trades if you're good at it? You know what I tell them? It's not worth the psychological risk. I would rather be a little bit heavier on the one trade that's going to take me to the next level as opposed to just walking around like, oh my God, like a barrage of names, and your head is like, oh my God, how did I go through this whole day? And you're feeling like garbage, and you're going to be nastier to the people around you, potentially. Some people not, but this is a very common side effect of this. You're nastier to the people around you. You feel like you want to sleep. You don't really start communicating much with a lot of your friends anymore. Is a very common side effect of this. You're unhealthier. You're more prone to illness. You're more prone to sleep deprivation. When you're doing great, everything is okay. When you're not doing great, you could barely get up out of bed. These are side effects of these things. And nobody talks about that. Nobody talks about that this strategy over here, even though, person XYZ made 1, 2, 3 on the trade, what actually involved inside that trade? And what were the other trades? And what did they feel like? You see, too many people, when they look at a stock, they base it mathematically. And you want to know who does that real well? Black boxes and algorithms. That's exactly how black boxes and algorithms, those little strategies are programmed and programmable. Completely programmable. Easily programmable. Easily. But we're human beings. And when do you want to accept that? When do you want to accept that? Maybe you could do well trading if you weren't emotional all the time. How many people would love to not be emotional when they're trading? And to me, as long as I'm just doing the ideas, you, you, Wilson, Rich, you, you, him. What if I said the only way you're going to relieve this anxiety is if you buy a stock and you're right 70% of the time? And not only do you need to be right 70% of the time, you need to be up money relatively immediately. Because nothing is a worse feeling for a trader to be in a position in down money. It's an inevitability, but unless you actually strive to remove that factor in the strategy, you are done for. You will If you think you're part of that 1.2% who succeed, good luck. But nobody is telling you the pitfalls, the psychological pitfalls of what these strategies do upon you. So I came up with a solution for those overtrading this environment. And you guys wonder why it goes very quiet in the afternoons, right? Because there's great action in the morning and there's more stuff. Still talk to Newsbeat Bandits. We were talking earlier during the evolutionary gathering of actually removing 2 lines of our strategy, the one where the bar must close green. And if you remove that part of the strategy, you could have done really well. So the two names we had were actually these two. These were the two names we had from Friday. 2 out of 10 UAA for a long, Apple for a short, and you could apply our methodologies and you'll know exactly where we were buying. So here is the 1 minute, for example. Now, normally we would have to ignore that. And if you're sitting here wondering, well, why exactly would you ignore that? Well, it's these 2 lines that you have to ignore. The first 1 minute bar must close green. The bottom of the first 1 minute bar breaks down. Do not take this trade. If you ignore those 2 lines, and these are the type of tweaks that I look for in this environment, and I could actually answer to why it's happening, you would have actually done really well on Under Armour. Because the one and done strategy would have bought you right over here on this 9:33 a.m. to 9:34 a.m. candle. You would have bought through 22.49, and 5 minutes later you would have been at 22.88. Those options from there to there, I think they moved 250%, maybe 300%, 250 to 300% was up more later on. And then later on, just to, if that was too quick for you, here's the entire 1 minute chart of Under Armour, or at least up until right here, until 310. There we go. Here's the whole chart of Under Armour, and you're buying at the dead bottom right there through day lows utilizing our methodology, minus those 2 lines. And the reason for that is we went and watched the evolutionary gathering. We're actually showing you on the evolutionary gathering earnings names that have been reversals and ways we could play them. The next name I had on my list was Apple Short. And remember, I'll stick with my highest conviction ideas. Unfortunately, was these two out of 10 ideas. So I'm watching Apple Short as well. And here is your Apple Short. And Apple went up. Just want to show you what it looked like. Using the methodology, you would have shorted right over here. With a 20-cent stop, you would have shorted right here. Right through 187.63. 3 minutes later, it dropped 80 cents. Apple. Now, you might be saying, what's 80 cents an apple? Pretty much whatever you want it to be is what 80 cents an apple is. There is enough to practically, considering you're not a trillionaire, which supposedly there is none in the world, supposedly, you can make as much, you could do whatever you want with an apple. For example, these three candles over here totaled in 520,000 shares of Apple in 3 minutes. There was as much Apple as you wanted. And this would have worked shorting through here. So if you actually did the one and done, somebody asked today, how's the one and done doing? I need to, in the future, what I'm going to do, and by future I mean starting tomorrow, I'm going to try trading the one and dones without line 4 and 5. And again, line 4 and 5 are very simple, very, very simple. The first 1 minute bar must close green if it gaps up, red if it gaps down. And if the stock goes through day highs or lows, we ignore it. And it's kind of funny. You might say, well, why are you doing it? Is it just based on these two names? And the answer is, of course not. What we've been seeing in the market is a lot of reversal plays where if names gap down, they tend to head higher. If names gap up, they tend to head lower. I even shared a strategy that I'll be looking at this week, utilizing this. It's kind of insane, but a lot of these gaps have been filling. So what I'm even thinking is, maybe do one and done in opposite directions of all these gap plays, utilizing the new change that I'm going to try in the one and done. Um, just literally evolving with the market. And that's what you have to do. And I want to mention something with these one and dones. You're up, this is a 1 minute chart. You're up money immediately. You short there, you're up a little bit of money immediately. Now, you might you might sit there and say, what's the difference with a little bit of money? Psychologically, it's the difference between day and night. It's the difference between something and the exact opposite of something. That is what it is. It is a night and day difference when you are up in a position holding, waiting for the next move. You're telling me when you're down 20 cents on a position, how do you feel? You're more focused. You're more alert. You're more skeptical. Doubt sets in. You're fighting with yourself. You're fighting with yourself to obey to your rules with the stop loss down here. You want to know the difference between the same trader buying a stock and having it go up with the same stop loss and the same rules? The trader is relaxed. Should I peel some? Maybe it keeps running. Maybe I should just lock in some profit here and just trade it on the house so I don't have to worry about the stock anymore. So I'm not sitting there with a bated breath, cursing underneath my breath potentially, angry that I took the wrong trade, curious, questioning, asking yourself if you did the right move. So when I say these strategies are designed to be up money almost immediately, I mean that. The best trades that we have look at that big day we had this week. Were you up money immediately after buying that position? And that is really the key. It needs to be almost done instantly. Almost done instantly. Because otherwise psychological toxicity will steep in. I just proved it to you. I just proved it to you. You bought a stock, it goes down 20 cents, your stop is 50 cents total, so it's 30 cents to go. You're questioning everything you're doing. You're thinking of selling early. You're thinking of doubling down. You're thinking of breaking every single rule, including your stop, including the fact that you shouldn't be doubling down. You're already thinking negative thoughts. Now, with these negative thoughts, you're going to be doubtful when a real good position sets up. But most traders don't talk about being up money immediately as if it is not important in this environment, as if the ends justify the means. The ends do not justify the means. And I'll prove that to you. How long do you want to be a trader? Do you want to live a healthy, happy life? Do you want to make money in the market? Do you want to do this job for 6 months, a year, or for the rest of your life and retire off of it? I guarantee you, every trader out there is going to say you want to retire off of it. Of course you do. Why on earth would you do a job like this if it couldn't pay your damn bills? What is freedom without the money to take care of the worries behind you? So when you buy a stock and you're up money immediately, really nothing else matters because now you have zero psychological toxicity. You're not thinking negative things. You're thinking, wow, that was a really nice entry. What do I do here? I could sell some if I want. Maybe I'll hold. I still have my stop in that same place. Okay, let's see how much I could hold until my target. People think that targets are supposed to be abided by as if it was etched in stone. No, you have to be mathematically insane to think that. Because if the market turns on a dime and you're still holding the position because, you want to just see how it does with the market, good luck. Good luck if you're holding a major name with the market moving against you. Good luck with that. But everybody can tout a number, everybody can tout a strategy. Um, I would say the important thing, and if this didn't prove it to you tonight, I don't know what would. The important thing with all your trades, if you want to be a trader in the long run, if you're walking into trading as like a 3 month casino, yeah, you don't need my advice, really. I mean, you'll do what you need to do. But if you're looking at trading saying, I want to do this next year, I want to do well with the job, and I want to do it next year, and the year after, and the year after, and the year after, who would want to retire from this job? I'll tell you who. The people who suffer the psychological toxicity based on their trading. Those are the traders who want to retire and do slower strategies. You notice that? That's why when I tell people, again, going back to you can make 10 cents here, 15 cents here, why wouldn't you do the trade? Because it doesn't talk about the psychological fortitude that I lose and risk on the trade. That's not mentioned. And that's also not mentioned with any strategy that's ever shown out there because it's easier to flash eye candy in front of you, a blinding piece of eye candy, than it is to actually understand that you're a human being on the other side. You have an account on the other side. You want to make this profession work on the other side. You want to potentially be doing this for a longer time than you are right now. You want to do this another 5 years, 10 years, 20 years. That is you on the other side. um, you're going to have to take care of your psychology and your brain and your body before anything else. Otherwise, everything you do is going to fail. And that's the fact. That's what they don't want to tell you. And once you can accept that, you could be an exception. You could be a Newsbeat live trader who is right in that tippy top of the pyramid. We have so many traders, so many traders who are in that top of the tip of the triangle there. Because trading isn't easy. Because the hardest part about trading is what you do when you're not trading. And that's why trading is not easy. The hardest part of trading, going to bed on time, eating right, being healthy, keeping your mind good, doing strategies that don't form psychological toxicity. And if you're able to abide by that and figure out these strategies and be up money on your strategies after you buy them. Because I'll stop and I'll ask you, if you buy a stock, ladies and gentlemen, would you rather be up 20 cents on it or down 20 cents immediately after you open it? Don't act like it doesn't matter. I have a 50-cent stop. It doesn't matter. Either way, don't act that way. It's just not true. It's not true for the vast majority of human beings. Nothing feels better than buying a stock and having it work in your direction immediately. That's why being able to effectively call a bottom is a very important tool. That's why these algorithmic levels we give you are a very, very important tool. Like us giving you Google at 1,184.86. We gave it to you last Thursday. Thursday night we gave you that level in Google. 1184.86. Day high on Google. 1186.29 and then plummeted. Here, this is a 1 minute here. Let me show you on the 5.